Let's talk about tax reform and the notion of capital.
If you think about the US market, large companies in US don't have a shortage of capital if they want to pull the trigger on a good deal, which is value accretive to them and their shareholders. But a lot of the capital was also locked overseas. What you would see is a lot of it coming back. As you and I have been talking to our clients, what you'd also see is a lot of the people are basically saying, look, there's surplus cash. If we can't put it to good use, in other words, towards driving the long-term value, long-term growth trajectory of the company, we're going to give it back to shareholders.
What are some of the things you see more often going on in the market today that are driving the more successful decisions around how and where to deploy capital?
So interestingly, right, ever since the tax reform has passed, what we are actually seeing is a lot of our clients talking to us about capital allocation. They're talking to us about sort of the business strategy. Again, cash flow has become central theme just because EBITDA used to be sort of a proxy, but with the changes in the Tax Reform Act, now it's back to cash flow. So the focus is on cash flow and intrinsic value. We're helping clients deal with their deal models, updating their deal models, working with their business development folks. We're helping sort of C-suite think about what's the optimal capital structure to have, debt versus equity, how much should they be reinvesting in deals versus organic growth.
We did a survey recently. 79% of executives say that tax reform savings will allow them to make strategic investments that were not possible in the past. Let me get your reaction to that.
Right now, as you're seeing this extra cash come into the books, you're seeing a lot of companies returning money to, their stakeholders. A lot of companies announced special dividends or special, wages to their employees. So they're trying to think about all of these things.
Abhijeet, what do you see in the next 18 to 24 months as companies look to execute on their strategies and use the capital and resources available to drive the returns their shareholders expect?
I think, John, more of the same, perfectly honest, but I do see, sort of, in your words, the strategic arms race for assets, capabilities, and talent. My personal opinion is that they take a long-term bet on all of these things. And so you're going to see a lot of investments around the workforce, around reskilling them, digital capabilities. I don't see M&A slowing down, to be perfectly honest with you.